I get so many questions for like, where do you place your stop loss at? If I'm trading with a fair value gap, I'm putting it below the candle or above the candle relative to if I'm buying or selling the candle that creates the gap. That's what I'm doing. If I get stopped out and it trades back below or above respective to the fair value gap, in deference to it being a bullish or bearish PD array, I'll treat it as it needs to move out of it and then come back and retest it. And then if it does, then I'll enter there and I'll put the same stop loss I used initially. So looking for setups like something like this one here, okay? If you were to take that long and only use the low of that candlestick right there, if you were only going to use a simple bread and butter approach to just trying to make money, you're literally just trying to get money and get done and move to the sidelines and go live your life, you could use this pattern here. And the range that it is retraced from, that's this high right here. Be honest, okay? If you were able to find setups like this on a daily basis, buying inside of a fair value gap, the easiest sure thing entry, which is the only one that I think you should be worrying about right now, one tick below the candle that creates the highest parameter for the fair value gap. Because if this is between this candle's high and that candle's low, this frames where your stop loss is. So your stop loss has to be at the buy or the low. Depends on what you're willing to assume in terms of risk. If you want to be really aggressive about risk, and you're doing trade with a larger leverage, then you're going to obviously go with the body. If you're more risk averse and you're not going to trade with large leverage and you're learning still and you want to give yourself some flexibility to stay in the trade and not be potentially stopped out, you're going to use the low of that candlestick. But the entry would be one tick below that. That's the easiest, no-brainer. This is how you do it. The stop loss is the low. Or if you are using larger leverage and your convictions are strong, you can use the body's low. In this case, it would be the opening price. So the difference is whatever that is. How many contracts can you trade? I don't know what you're trading with in terms of equity, but you should be trading the least leverage that you can possibly do. That's a micro. Okay? You're not risking a whole lot of anything, but you're learning. You took off, say you had 2 contracts and you went long down here. You take one off here and you let it run. The target was explained to you over here, that's the buy side. And then you want to sit back and wait for it to engage that. Then you have a choice. You either take it off on a limit at that level or hold it and manage a stop loss to see if it can dig up into here and maybe even run off even higher. That's the purpose and the luxury of having a runner. You have the luxury of determining what you want to do with it. Do you want to cut it off at a definitive level? Well, I gave you that. It's right above here. If you want to let it run, if it gets to that point, how can you manage that? You use it as a trailing stop loss. Trailing stop losses prior to areas where a partial would be logical. If you're trading any position with a trailed stop loss, and you're moving it up into a range from a discount, and now you're entering the realm of what would be premium, and I'll explain that to you right now. In this example, you would have this. That high to that low is what we measured, and we would be in a discount still trading to this fair value gap, which is the first one that formed because there's no fair value gap in any of these up close candles. The market trades down into that fair value gap. That's your first entry that you can now target premium. Premium is defined by the high to low of that range. So midpoint of that, let me just pop it up real quick. That's equilibrium. So minimum is to trade to that, but it does that and then it comes back to that fair value gap. So now we're in a discount because here's equilibrium to the low, discount. Then it's going to do what? It's going to expand up into a premium. So what premium arrays do we have? This high, relative equal highs. That wick I talked about, and I said that high. How far can it go above that? It can go up into this old range and bump that last up close candle. You either take it off there on a hard line limit to say, okay, my final runner, we're just going to call it a day there and be content with it. Or how would you manage the stop loss? Your stop loss cannot enter above this region here because you're entering into a realm where it can retrace still. So your stop loss has to be, oh, this will be a good place here. So whatever it was here, it's trailed up to there. If you look at my trades, that's how I'm managing them. Unless I'm real close to terminus and I have one contract left then I'll trail it up to something that would be below here because there's a fair value gap and we already traded to it. So I wouldn't want to see that fair value gap traded to and go over or below it rather. It would be failed. Okay. So it's a matter of context, where you are in the trade relative to where you were targeting. And the runner is where you want to finesse. The last little piece of your profitable trade, that's the one that you have the luxury to finesse. Whether you get stopped out on it, whether it goes to a hardline limit order and you exit out there, or you hold on to it and you keep your stop loss at break even plus commissions and costs and just let it rip and just see what happens. None of those outcomes are wrong. Because if you take it off at any time and it runs 200 handles, and if you would have stayed in with that runner, you're going to consider that wrong. You're going to beat yourself up about it. So you got to give yourself permission that any outcome on a runner in a profitable trade after you've banked partials, there's nothing wrong with anything that you do with it. There's nothing wrong with that. And that's managing your expectations. It's also managing your ability to stay within the context of a bias, whether it be the daily bias or the session bias.